Hey, this is Warren Redlick. I want to give you my first impressions of the Q4 earnings report and earnings call. I'm going to dive right into it. This is for Patreon supporters, local supporters, and YouTube channel members at the exclusive content level. I expect to do a more complete video for Saturday that will be public on YouTube, but I want to just give you my first impressions now, going through first the earnings report and then what happened in the earnings call. Um, Average selling price appeared to be down about $3,000, and I did not expect that much of a drop. I was a little bit taken aback by that. I thought it would drop in Q1 rather than in Q4. I thought that the prices for Q4 there was some drops and some discounting at the end of the quarter, but I thought most of the quarter was up. So that was a little bit of a surprise. I do think that average selling price is going to drop more in Q1. By my calculation, auto revenue, I'm going by auto revenue over vehicle deliveries. Auto revenue in Q4 was 52,574. In Q3, it was 54,364. So that's down about $2,000, not $3,000. In the same vein, auto gross margin was down 2 points from 27.9% to 25.9%. I should mention, I'm going to go through some numbers. There's some really important stuff for the long term. I'm just going through some numbers now, and in the course of this video, I'll cover like what I think is really important, but I just want to go through like my notes just to lay it out for you. Total revenue for 2022 was 81.5 billion. I predicted 82 billion. I think I was pretty close. Yeah, I got some things right and some things wrong. Earnings per share Q4 was $1.19. That beat the street. The street estimates was $1.10. It was below my guesstimate of $1.30. I was not confident in my estimate. I didn't claim to be certain that it was going to be more than $1.30. That was just a gut call. But then I thought revenue was going to be higher. I thought average selling price was going to be higher, and that would have pushed it up more. And I think there were some costs in there that were a little bit of a surprise. Free cash flow in Q4 was only $1.4 billion. That was down from $3.3 billion. I think that's a result of a buildup in inventory. I haven't figured out exactly what caused that. I was a little surprised that no one asked, none of the analysts, because it wouldn't be in the Say Technologies questions from retail investors, but I was surprised none of the analysts asked about it. 2020 revenue, on the whole, this is sort of good news. It's not really long-term news, but it's 2022 revenue was up 51%. So we are seeing revenue growth of over 50% a year. Even if deliveries were not up 50%, they were only 40%, and production was only 47%, revenue for the year was up 51%. Operating income was up 110%. Net income was up 128% or 85%, depending on whether you're talking about GAAP or non-GAAP net income. So you're seeing basically 50% revenue growth and 100% or doubling of profits. Now, I don't think in 2023 we're going to see huge profit growth. I think we're going to see significant volume growth. I think revenue growth is going to be pressured by prices. I do think we're going to see some good news in terms of how the tax credits play in, but it's really hard to predict that going forward. So I think we should be cautious about 2023 in terms of profit numbers, earnings per share numbers. I think, before I was thinking we were going to see $8, $10 a share. So many bad things have happened, the recession, everything that happened in China. I think we're looking at optimistically at $6 a share, and it might be worse than that. It depends how bad the recession is and how much pressure that puts on Tesla pricing. We have seen Tesla did a little bit of a tick up in Model Y pricing as a result of what they're seeing in terms of demand. So maybe there's some hope there. So non-GAAP earnings per share, which is the number I think the street uses for the year 2022, was $4.07. I think it's going to go up in 2023, but I don't think it's going to go up a lot. Negatives, according to Tesla, things that were holding back the numbers. Foreign exchange impacts. The dollar's up, so profits made overseas, revenues made overseas count for less. Raw materials, commodities, logistics, and warranty costs were a problem. And the 4680 ramp, as Giga Texas and Giga Berlin are not producing at full volume, their cost per vehicle is higher because you're amortizing the factory over a smaller number of vehicles, and there's other inefficiencies that are resolved when you produce in higher volume. So that's something that will get better going forward. Storage deployed was only 2,462 megawatt hours. I think that's 2.4 gigawatt hours, up from 2,100. It's growing, but it did not grow as fast as I thought it would. It was 150% above Q4 2021, but I was expecting potentially 3 gigawatt hours. So I was a little disappointed there. There are a couple of people on Twitter who've been pumping Megapack saying that the numbers are going to be crazy. And I think that in the long haul, going down the road a ways, we're going to see some really good numbers for Megapack and Tesla Energy, but we don't see it yet. And I think people are overstating the potential for 2023. We'll find out if I'm wrong. Just a little note, superchargers went up to 42,419. Tesla's continuing to grow the supercharger network. That's really big. And there was no change in reported capacity. It's one of the things I talked about. Do I have that? There's no changes here in this graph. I think this is one of the important things that Tesla reveals every quarter, and there's no significant change here. I thought we would see higher capacity for Fremont. Everything I'm seeing, Fremont is producing at 700,000 to 800,000 vehicles a year, and this only shows 650,000. I don't think Model S and X are reaching capacity, but Model 3 and Model Y are, my impression, producing more than 600,000 vehicles a year at the rate that they're at. So it's a little surprising they haven't pushed that up. Shanghai, it says greater than 750,000. I've seen reports that Shanghai's at 1.2 million. Berlin and Texas are, capacities greater than 250,000 each. The run rate that we've seen, and it was indicated in the report, was 3,000 a week, which is 150,000 a year. So between the two of them, that's a 300,000 run rate. If Shanghai's at 1.2 million and Fremont's at 700,000, then you're at 1.9, 2.2 million run rate between those four factories at the start of the year. Conservatively, let's say the run rate is 2 million vehicles. You'll hear later that, and you've probably heard already, that Elon is projecting, or Tesla's projecting 1.8 million vehicles in 2023. That seems awfully low. And they said, yeah, well, we're really thinking 2 million, but we can't anticipate what kind of crazy stuff's going to happen that's going to depress our numbers. I think 2 million is sandbagging. If the run rate of these factories is 2 million and they're growing. Now, they said Shanghai is not going to grow, but Berlin and Texas by the end of the year will probably have run rates close to 500,000 each. So that's a million on top of a million, and this will be close to a million. And, especially if you add some Cybertruck into Texas, that won't be significant, but there'll be a little bit there. Run rate at the end of the year should be close to 3 million. So you got 2 million run rate now and 3 million run rate at the end of the year. I don't see how you don't end up with more than 2 million vehicles, but I tend to be over optimistic. So that's my take on that. I just wanted to cover that. I said I was going to talk about this. In the earnings report, guidance for 2023 was 1.8 million vehicles, which seems crazy low, as I just said. They did say, and I mentioned this, there's no significant volume increase expected for Shanghai. Shanghai is basically at its limits. So unless they're going to build a new factory in Shanghai, which maybe we'll find out March 1st, and even if they do start building a factory in Shanghai, it's unlikely to produce in any significant volume by the end of the year and may not produce anything by the end of the year. I didn't think this was new. They said the 4680 cell production was enough for 1,000 vehicles a week. They did not say if it had tripled compared to the previous quarter. The previous quarter, they said 4680 cell production had tripled sequentially from one quarter to the next. They didn't say how much it increased from the previous quarter, so it's unclear what the growth rate is. There was a question, investor question about 4680, but the question wasn't specific enough and they didn't address it in that way. Financials, Energy had 1.3 billion in revenue, which was nearly double previous Q4 the previous year. $1.15 billion in costs, so a 12% gross margin on Energy. I didn't hear anybody talking about Energy gross margin, but I'm reading that as a 12% gross margin. That's good. Tesla's making progress. They're growing revenue, and the Energy is now sort of profitable, at least on a gross profits basis. There's other things that get taken out along the way that might make it actually non-profitable, but close at least. Inventory was up 2.5 billion. I think that probably cleared early Q1. The excess inventory cleared Q1, and I think that's a tailwind for Q1 of 2023. The team of Zero Sum Game 33 and JP Sartre, whatever, on Twitter insist that the buildup in inventory is Megapacks, and Megapacks going to be this big monster in the coming year. I don't fully understand why inventory was so high. It's, like $12 billion or something like that. If you add up the number of cars you have to get $12 billion in inventory, it doesn't really make sense. So there's something a little confusing there. We'll see. There were some other notable things in the charts. Changes in operating assets and liability was negative $2.2 billion, and purchase of investments was negative $4.4 billion. It wasn't really clear what those were. There was something else with digital assets that was a big number. Unclear what those were. That's like accounting stuff. I don't think that matters for the long term of the business. It was just kind of what was that? And I didn't think we really got an answer to that question. I think the Wall Street analysts, like the Say Technologies questions from retail investors that are submitted in advance, we don't see the earnings report before we submit our questions. Yeah, investment analysts probably should have picked up on that, and I don't think they did. Okay, turning to the quarterly call, Elon said demand was the strongest orders in January in the company history. To double the rate of production, they raised Model Y price in response. So, with all the people saying there's a problem with demand, apparently not. Elon is expecting a contraction in the auto market as a whole. There's going to be a lot of pressure on sellers, and we'll see whether the contraction is enough. The demand contraction is enough that it's going to affect Tesla and they have to lower prices again. I don't think they will. I think they're still going to sell at this price. That the prices have dropped so dramatically when you include the tax credits that now the Model 3 standard range competes with the V6 Camry, and the Model Y long range competes price competitively competes with the Camry on the one hand, and the Model Y long range competes on a price basis. They're price competitive with the Toyota Camry V6 and the Highlander, the high end, the reasonably high end versions of the Toyota Highlander. This is a step change in Tesla's competitiveness with the market. Like if you were shopping for a Toyota Highlander, now all of a sudden you can buy a Model Y for about the same cost. They noted that costs in production in Austin and Berlin were dropping with the growth. So we're going to see, like, we've got declining prices, but we're also seeing declining costs of goods sold. They didn't really talk about it, but the tax breaks from battery cells and modules, they did mention that they're splitting the value. I'll cover this later. They mentioned that they're splitting the value of the credits with Panasonic. So they're getting some of the credits for the Panasonic cell production, and the module assembly, they're getting some credits. So that it's not going to play in. I don't think it comes into cost of goods sold. I don't think it comes into revenue. It comes in after gross profit. I'm not sure exactly where it comes in. I don't think we know the answer. Again, that's something I thought the analysts should have asked, or the Say Technologies question should have asked. That one should have been an obvious question, and it wasn't asked. And by the way, I couldn't access Say Technologies. Not that it would have mattered, but I didn't have access to it, so I didn't get a chance to put that question up or vote for something like that. So there was a really big statement by Elon that long-term Tesla is aiming for well in excess of 1,000 gigawatt hours of cells produced internally plus suppliers. And I think he said 2,000 or 3,000 gigawatt hours of cells potentially. So when you look at the battery revenue model, if you're talking about 1,000 gigawatt hours of cells produced by Tesla, which I think is an understatement because Drew Baglino already said they were going to do 1,000 gigawatt hours of cells in the US alone, and they're already working on producing batteries in Berlin. So 1,000 is nothing. If they go to 3,000 gigawatt hours produced by Tesla, and that's probably not by 2030, that's probably early 2030s, and they're buying batteries from suppliers, the battery revenue model just goes crazy. I was talking 1.5 trillion in revenue. If you go out to six terawatt hours of batteries, you might be talking about $3 trillion in revenue, which is basically a 40x on where Tesla is now. So $80 billion in revenue, go out, 320 billion would be 40x. So, you can do your math and say, what does that do to the share price, in 10 years, let's say? It's pretty crazy. And that's without Robotaxi, that's without bot, that's without AI training as a service, all these other things. The plan is for making 4680 low cost and high energy density. One of the confusions that I see that was not answered, the analyst didn't ask, is what is Tesla's plan for mix of chemistries? You've got lithium, and then this is a question that should be asked in the Q1 investor call. If we don't get a chance to ask on March 1st. What do they expect the mix to be of iron phosphate, iron cathode based cells versus nickel cathode based cells? It seems like Tesla is planning to go really big on 4680, and Elon specifically said low cost, high energy density. High energy density would exclude typically lithium iron phosphate. So are they planning to make lithium iron phosphate in a 4680 cell format? What exactly are they doing? This is like when you're looking for the long-term questions, like how are they going to handle this mix? Is it that they've secured so much nickel and they've got their raw materials down and they've got their manufacturing down that they're confident they can produce nickel-based 4680 cells in such volume they don't need iron as much anymore? That's really left wide open. Obviously they're going to use batteries from CATL, but there's an incentive now to produce as many batteries as possible in the United States that were produced in the United States to get the full tax credits and take the CATL batteries and use them in China or Europe. So it's going to be interesting to see where that goes. I think that that's the kind of question we need to see if we can get an answer to on March 1st, or see if we can get an answer to at the next earnings call. Questions about the mix of and is it iron phosphate? Is it going to be iron phosphate doped with manganese? You know, will we find this out on March 1st? Will we be able to ask that question on March 1st? Is there somewhere else, some other way we can find out the answer to this question? I don't think it's critical. I think it's interesting to know the answer to that question. Briefly, Zach talked about rapidly increasing volume while improving efficiency, and he anticipated a margin hit in the short term. So margins are going to be hit. Now, margins are before you take into account the tax credits. So will the tax credits soften the actual blow when it comes to net income from the margin hit? I don't know. But I think, we're looking at, maybe sub 25% margins, maybe even 20% margins for 2023. All this depends on how bad the economy is, what Tesla has to do with pricing, what happens to the cost of the supply chain and all that. I'm turning to Say Technologies questions, which kind of was already answered. The first question was, what are the order trends for this year? And there was a second question about the reaction to global price productions, and they were consistent in saying demand far exceeds production. Tesla has a huge amount of demand for its products. Demand has never been a problem. They juiced the prices to really kick it into gear, and this is going to be a problem for the major auto companies. They're sort of Osborning the major auto companies. Really good question. Will Tesla take full advantage of battery cell and module tax credits? Elon said they're splitting the value of the credits with Panasonic from the Giga Nevada factory. Zach said they expect $150 to $250 million per quarter and growing over the year and beyond. They intend to move more manufacturing onshore in the United States, which was Tesla's plan anyway. And they're going to use incentives to improve affordability. So I think the impression I got was, to the extent that they use the tax credits, they take advantage of tax credits, they're going to use that to keep prices down so that people can afford to buy more cars. There was a question to Zach, where do you see average selling price and gross margins after the price cuts? Zach said above 20% auto gross margin and above $47,000 average selling price. So those are good numbers. I feel confident about it. That's actually good to hear. I think that's with the ramp of Model Y growing bigger as a share of the vehicles, and Model 3 relatively lower. At least in the United States, Model Y is selling for more than $50,000. So if that's the bulk of the vehicles and they're starting over $50,000, you're going to get above $47,000 average selling price. Prices in China are lower, but prices in Europe are still high, and there's prices in other countries that I think are higher. Zach stressed that operating margin is more important than auto gross margin. They're managing to operating margin, not auto gross margin. They're keeping their operating costs down. So even though auto gross margin might change, if they can grow the company and keep operating costs down, then operating margin is up, and operating margin is closer to the profit line than auto gross margin. Elon pointed out, and he said this many times before, every car we sell is enabled for FSD upgrade in the future. Millions of cars can add FSD at 100% margin. He actually said, so I actually had an argument with Omar from Whole Mars blog. He was saying, no, it's not 100% margin. It's not 100% profit. Elon said millions of cars can add FSD at effectively 100% margin. The value of FSD grows when fully autonomous. It'll be the biggest value increase in history. So, at some point it becomes fully autonomous, and lots of people who already own Teslas flick the switch, and the revenue just pours in, and it's all profit. There was a question about Elon's political tweets and whether they had brand impact. Elon said the Twitter follower count speaks for itself. He has the most interactive social media account in the world. And and he said this before, Twitter is an incredibly powerful tool for increasing demand, and they're seeing net value from Twitter is gigantic. So Tesla and Elon tweeting on Twitter and other Tesla related accounts tweeting on Twitter are driving demand. They are seeing that, they are measuring it. Now, I think the question was more like, look, we had this survey. Does Tesla do its own surveys, or how does Tesla gauge brand impact? And I think the answer is they didn't really answer that question. I think they're just saying, look, the brand is doing well from everything we see. So is there some damage to the brand from the political tweets? I think it's incredibly minor. I don't think there's brand damage from Elon's tweets in China, which doesn't have Twitter. I don't think most Europeans care whether Elon makes fun of Joe Biden or, says something positive about Republicans or, Ron DeSantis. Europeans don't know who Ron DeSantis is. So, maybe A small percentage of registered Democrats are not going to buy a Tesla who would have bought a Tesla before, but the Democratic Party's been attacking Tesla for a couple of years now, long before Elon started to buy Twitter. In Elon's words, the net value from Twitter is gigantic. So they're seeing real positives there. And, he said, Twitter will deliver benefits to Tesla shareholders. I think that's what their point is. I think there's more. I think they're going to use the Twitter data to help Tesla engineers train large language models in AI, but we'll see. 4680 ramp details was a question. When does Tesla expect to scale to 10,000 vehicles per week? Drew Baglino said that I think he's talking about the 4680 line, that one of the 4 lines is in production, that 3 are in the process of getting into production. So if you follow that, you say, okay, well, they're at 1,000 vehicles a week now, or in the ballpark. When they get those other 3 lines in production, that would be 4,000 vehicles a week. And they're still producing 2170 model-wise in Texas as well. So how long does it take to get those in process? And then are they able to increase the productivity of those lines? We'll see about that. And the goal is to deliver cost-effective production in advance of Cybertruck. So they're trying to produce more batteries, get them produced, because the ramp of 4680 is also a negative on margins because they're not producing in high volume. So the same problem with not producing vehicles in high volume. So can they get the cost of production, the volume of production up, the cost of production down to the point where it becomes cost-effective? Because I didn't say it, but Cybertruck's going to use a lot of 4680 batteries. Very clear that Cybertruck's going to be 4680. There was a question about hardware 4, the FSD next generation hardware. And this is the biggest clarity I think we've seen from Elon yet. Cybertruck will have hardware 4. Cybertruck will not be significant in 2023. So I got a fairly early Cybertruck order. I'm guessing at this point I'm not getting my Cybertruck. Just on a personal note, my youngest goes to college this fall, maybe this summer. When my youngest goes to college, probably won't take my Model 3 to college. I'm probably going to sell the Plaid Model X and start driving the Model 3 again just to save a little bit of money and hold that until Cybertruck comes. That's my rough guess of what I'm doing. Anyway, there was a question about whether current cars will be upgradable to hardware 4. And Elon said upgrade will not be needed and it won't be feasible. Hardware 3 will be, they're projecting 200 to 300% safer than human. And I think that means good enough for full autonomy. If it's 200 to 300% safer than human, if a human can drive, if it's 2 to 300% safer than a human, then it should be able to drive fully autonomous. Because humans drive fully autonomous. I drive the car, I don't have help. I mean, I have help now with my Tesla, but I can drive a regular car without help. Hardware 4 he's projecting will be 500 to 600% safer than human, and there will be a hardware 5. But he did not think upgrading would be feasible from hardware 3 to hardware 4, so that means there's significant changes in hardware 4, possibly because a lot of people are saying they need different camera layout for hardware 4. Is that part of it? I don't know. I don't think so. There was a question about Tesla insurance. Zach said it will, and the question was, will Tesla start reporting Tesla insurance as a separate line? They don't support superchargers as a separate line. I think superchargers are bigger than insurance, but he said it'll take time for business to be large enough for specific disclosure. It's a $300 million annual premium run rate growing 20% per quarter. So with Tesla having, I don't know, $24 billion in revenue for the quarter, with Tesla having $82 billion in revenue for the year, $300 million is way less than 1% of revenue. So does it really deserve a separate line? No. In the states that Tesla Insurance is operating, 17% of customers are using Tesla Insurance, and most of those are people who adopted it when they took delivery of a new car. They're not pulling a lot of people away from their existing insurance company. I think they said that insurance tends to be sticky. People tend not to leave their insurance companies. Their motivation in delivering Tesla Insurance is not, they're going to make a profit, a small profit, but the motivation is to improve total cost of ownership to make it more attractive to buy a Tesla. Elon pointed out this forces other car insurers to reduce premiums for Tesla. Other car insurers had been charging more for insurance for Teslas, and this forces them to reduce their premiums. There's a second benefit, which they've talked about in the past, that there's a feedback loop that having their own insurance company handling the claims gives them information about how the cars fare in crashes and how they can design the vehicles better so they reduce damage in a crash. Pretty interesting. They adjust the design of the vehicle so that they minimize the cost of repairing things that might happen when a vehicle crashes. There was a question about whether Cybertruck production would start mid-year. Elon said production would start in the summer, but start of production is always slow, and he said volume production will be 2024. And then I don't think it was Elon, maybe it was Lars, said they've started installation of all equipment and they have built all beta vehicles. That was a question from, I think, Q3, where Elon asked, when am I getting my beta truck? And so I guess this means that Elon has his beta Cybertruck. So we may be seeing more Cybertrucks out somewhere. And that may be March 1st. Maybe March 1st, we're going to see the betas of Cybertruck since they're out. There was a question about where the next mega factories would be and where they're needed. And Elon said they would update in the future. They're thinking about this carefully and announcements would be later this year and next year. So next mega factories. That was a reference, I think, to the Megapack factories. So they're not revealing. It sounds like they haven't made up their minds about that yet. Now, I think they may be building and this didn't come up in the investor call or in the report. There's some indication that Tesla's leasing a million square feet of space in Houston. I think that might be for a lithium iron phosphate cell production facility or a 4680 cell production facility. And maybe they'll be building megapacks there. But it's odd that they're thinking about it, and yet they leased this space. What are they doing with that? Maybe they'll tell us on March 1st. Maybe they won't. It would be a really good question. They probably won't answer. Analyst questions. Rod Latch asked about 1.8 million unit volume. Is that supply constrained? Elon said the internal production potential they're predicting is closer to 2 million. There's always some force majeure event, something that will slow it down. If it's a smooth year, they have the potential to do 2 million. I still think they're sandbagging here. I think that their production rate is already at 2 million. So why wouldn't they do 2.2 million? I'm not saying their capacity is at 2 million. I'm saying their production run rate is already at 2 million. They're doing like 1.2 million a year at Shanghai. They're doing 300,000 between Berlin and Texas and 700,000 in Fremont or 600,000 in Fremont. That's at 2 million or close to it, and they should be growing. Shanghai won't grow, but the rest should grow. Second question from Rod Latch. There's a headwind you're absorbing from ramps. And what is the investment cost per kilowatt for a new factory? Elon said the size allocated to make 100 gigawatt. Oh, he pointed out, so there was this announcement that Giga Nevada is going to grow to full size. And they're going to be making semi, and they're going to be making 4680 batteries in this additional space they're adding to the Gigafactory. And Elon pointed out, if you look at the chart, the size of the factory that's being allocated to make 100 gigawatt hours of 4680 cells is much smaller than the size that exists now for producing 35 gigawatt hours of 2170 cells. And Elon pointed out that one of Tesla's greatest advantages is their manufacturing advantage, and they're applying this manufacturing advantage to battery cells as well. Then he had this comment that there's other products we're developing, products plural, they're not announcing yet, that will blow minds. It's the most exciting product roadmap. And I think he said specifically products that will be using 4680 cells. I think he's got to mean an electric VTOL jet. It's like tough to figure out, well, what would be exciting? An electric VTOL jet, an electric vertical takeoff and landing jet would be exciting. What else? What are they planning? This, maybe we'll find out more March 1st. My guess is they're not going to tell us on March 1st. They're going to tell us about the Generation 3 platform vehicle. Maybe they're going to tell us about some long-term plans and factory locations and master plan part 3 about how they're going to scale. But, what these future products are is really kind of interesting. Elon said he's expecting a difficult recession. He can't predict the short-term stock price. And I think he said there's a really significant chance the stock price will go down significantly. Now, the stock price was up today. Last I saw, is up quite a bit. But, if the recession is bad, we may see it get beat down again. Zach was asked about cost headwind in the fourth quarter. Zach said there's a $2,000 to $2,500 headwind per vehicle from Austin and Berlin. So you can see that going forward, let's say 6 months, when Austin and Berlin are fully ramped, that's going to lower cost of goods sold on vehicles from Austin and Berlin by like $2,000 to $2,500. So that's a real positive for the future. Pierre Ferragu, one of my favorite analysts, asked about the cost headwind to cost of goods sold. What are they anticipating the cost of goods sold per vehicle is? Is it $40,000 for this quarter? How long would it take to get to $36,000 cost of goods sold? Zach said the lithium cost per car was higher. They're expecting the lithium cost per car to be higher in 2023 versus 2022. He doesn't think they're going to get to $36,000 cost of goods sold this year. There was another question about various external costs, and they're working to streamline what they can. Oh, that was not another question. One of the other staff, maybe it was Lars Moravi, said there's a lot of external costs and they're working to streamline what they can. Drew Baglino said that the Fleet 3 and Y are starting to mature, bringing some margin that they didn't know they had, and they're improving margins in powertrain. They're getting better at manufacturing in various ways, and as they keep improving, they keep finding ways to improve, and that's reducing cost of goods sold, and that increases margins. Elon said he expects the recession to lead to meaningful decrease in almost all input costs. I'm guessing not lithium, but all other input costs are coming down, so that may be helpful. I think they said steel and aluminum were down quite a bit. Farrago also asked about FSD versus a year ago. He asked about the take rate, and Elon didn't really answer this question. He said the trend is very strong toward use of FSD. Enthusiasm is increasing. He said Dojo will be operational later this year, and that's going to improve FSD. So there's a lot of AI talent joining the company. He talked about Optimus and Tesla's real-world AI leadership. He sees an order of magnitude market cap potential. Well, Tesla's currently trading around $500 million. An order of magnitude would be $5 trillion. And that's just from Optimus. I think that's just from Optimus. Potter also asked about incremental capacity in Nevada. Are all the 4680 cells fungible in the entire range of products? How are they allocated? Elon said that would be too much guessing, and Drew said they're not all going into semi. And Elon said future products would use 4680. What future products, Elon? He's not telling. I'm just assuming it's something out of Spaceballs, because he said before that most of Tesla's product roadmap comes from the movie Spaceballs. Analyst George from Canaccord said that the current competitive landscape, in light of price production, what does it see? What does it look like to Tesla? Who do they see as their chief competitor 5 years from now? Elon said he asked his autopilot team who's close, and there's no distant second so far. None of the car companies they're aware of. Somebody else said whoever keeps up the Chinese will keep growing in total vehicle space. The 95% of vehicles sold worldwide are not electric vehicles, so there's a lot of room to eat that space. Elon said that Chinese companies are the most competitive. They work the hardest. They're the smartest. And he pointed out that Tesla China team is winning in China. George from Canaccord also asked about the Inflation Reduction Act and whether there'll be commercial vehicle acceleration outside of semi. And Elon said, yes, but we're not giving details. Nice try. He said, what is the limiting factor for new vehicles? They were constrained on cells in the past. New product innovation has to match new cell production. I think he said this before. If we come out with new products, but we don't have cells to support them, then we just end up like increasing our costs and, spending money on vehicles that we're not able to produce in full volume. So as they increase cell production, they're able to add new products. I think Cybertruck's can eat a lot of cells, and semis can eat a lot of cells. So it's going to be a while before they have enough production to go with whatever the next products are going to be. So the next analyst is William Stein of Truist. He said, asked about the AI elements of the business, progress on Dojo, Optimus, and whether they would disconnect the GPU cluster. Elon has talked about if Dojo is successful, then they will stop using the NVIDIA supercomputer cluster and switch to Dojo. Elon said there's big error bars in any of the predictions. He thinks Dojo will be competitive with NVIDIA by the end of this year and will surpass it in 2024. I think given that they already have the Dojo supercomputer cluster, they're probably going to keep using it for a while, even once Dojo is running and competitive, because there will probably still be uses for this NVIDIA cluster. He said their goal is to deal with the energy usage required for training a frame of video. He expects an order of magnitude improvement for AI training. So the point is that if Dojo is able to train using less energy, then that improves their cost structure for training, because I think the energy to run the training supercomputer clusters costs a lot. And they're optimizing low-level software. He sees a path to an order of magnitude improvement. I think that's both a reduction in energy usage and an increase in ability to train at high capacity. But he said it's hard to say when that will happen. He also pointed out the efficiency of the inference computer is a huge advantage. And it's a potential for products not in automotive. We know they're using the inference chip in bot. Apparently, there's other products they might use the inference chip in. He keeps hinting at some product roadmap, and not something that Wall Street will evaluate, but it's kind of like puzzling to me. What else is going on? Next analyst, somebody named Williams, said, is the 1.8 million unit supply limited if it's demand limited, ability to use price? Drew said that 1.8 million is not cell supply limited. Brief answer to that question. Adam Jonas asked about the time for Tesla to expand a captive financial company. Tesla, some car companies do a lot of the auto financing themselves. Tesla largely goes through third parties to do auto financing. And Zach said they use it to plug gaps in the market of existing third party products. There's some offerings in Europe, loans for energy business. There's an opportunity to grow this growing slowly, but it consumes cash, and they don't want to use cash right now, especially. The plumbing is in place, the infrastructure is in place for Tesla to be able to do more, and they'll review that later this year. Elon said in severe recessions, cash is king, and they're cautious in using cash for loans. The Federal Reserve needs to be cautious, and he keeps criticizing the Federal Reserve as usable, and that the way the Federal Reserve is going with interest rates, they could crush the value of all equities. Adam Jonas also asked, how close is there to a step change in being able to sell vehicles under $25,000 or $25,000 or so? And Elon said it would be jumping the gun for future announcements. So those are my notes. I'm going to put together a more complete video. That'll be Saturday. But I just wanted to share this early for supporters here on the Locals platform, on Patreon, and exclusive content members on YouTube channel membership. So thanks everybody for watching. Check out the t-shirt. This is the new t-shirt, Tesla Man t-shirt at elonbits.com. Thanks everybody. Oh, use the discount code YTMember for $2 off. YTMEMBER. I think in all caps. I don't know if it needs to be in all caps, but it's safer to put it in all caps. YTMember is the discount code. You get $2 off merch at elonbits.com. Each item, $2 off each item. Thank you.